Hi, good afternoon, friends. Here we are. So yet another video. As we promised to you that there will be video very soon. We'll be doing the video on the mutual fund investment and mutual fund portfolio building topic. So today we here we are. We'll be discussing on the mutual fund portfolio building topic. The discussion is the mutual fund portfolio building. How can you develop a mutual fund portfolio? This is the big question for all investor, mutual fund investor. There are many funds. There are 40-45 fund houses. There are each and every category fund houses offering you in equity side 15-20 different funds. There are too many jargon every days, different types of opportunities, hybrid, thematic, alternative, lot of things, balanced advantage, the liquid plus means lot of thing, and every day you are listening there are new fund offer is coming. So it is very difficult, and this mutual fund market is very noisy because lot of companies, lot of fund. How to choose the fund, how to develop a portfolio, this is a very important. Not if you understand what is mutual fund is all about, if you see that the return, these are the basically the basic idea of the mutual fund. But you need to understand first what are the steps to be followed when you are developing a mutual fund portfolio, and what are the things you should consider before developing a mutual fund portfolio. So today we'll be discussing in these details. So let's start. So what is the mutual fund portfolio? The mutual fund, like when you are investing in a particular company's mutual fund, the say if you are investing in X company's fund, so they are investing around 40 to 50 stocks in that particular fund. So this is basically a mutual funds, that is the particular funds portfolio. Here we are going to talk about the how you develop a mutual fund portfolio. Means what is the number of mutual funds you will be keeping in your portfolio, and how this portfolio should be looking like, and how you diversify across the different market cap and different categories of mutual fund. So first of all, what are the things you need to look at? Basically you should be looking definitely when you are investing in a particular company's fund. You basically look at the risk parameter, you look at the return parameter, you look at the long term, what is the track record of the fund, short term, long term, medium term. You should be checking the fund manager or fund house strategy. You should be looking up the whether the any that is fund manager churn is happening on that particular company for the or particular fund that matter, and how the fund is generating the return. It is taking the additional risk, or it is basically just taking the average market risk and generating the additional alpha. These factors you need to consider. Apart from that, you need to consider the fund size also. The reason I will be coming to the later on, fund size is very important in critical. Please keep this in mind, and you should be look at the future outlook, and you must understand what is the future outlook of that fund. The past record or past return is for the past investor. When you are starting investment is today the very important factor. You need to understand the future outlook, that you will be getting idea of, if you discuss with the different person who are expert in this industry or expert financial advisor, that he or she can guide you regarding this. But you need obviously this is very important matter. You should keep this in mind. So then we're coming to the topic of what is the number of fund you will be investing, and what should be your investment strategy. See today there are a lot of categories, like equity categories. You are having the large cap fund, you are having the large and mid cap fund, multi cap fund, flexi cap fund, mid cap fund, a small cap fund. Apart from that, there are a lot of sectoral fund, thematic kind of a fund, and also the hybrid categories of fund. In equity side, these are the basic categories of fund is available. Now how to choose the fund, and what is the number of fund you will be choosing from here? And then first you need to understand that what is your, you need to build your portfolio as per the risk appetite. Here we are considering the building portfolio on equity fund only. We are not here to discuss about the hybrid and debt fund over here. So we'll be discussing only equity fund option only. So and we'll be, when developing a portfolio, we'll be talking about the mode of a SIP portfolio building for long term. Okay, and also we'll be talking about the, if apart from SIP we can do the STP or some thematic kind of investment, that we will be also discussing. So if you have the if you having the 100 rupees in your portfolio, you need to you can have a strategy for investment. That is, one should be your the particular, say particular strategy which is basically will be fixed, means there will be a constant investment approach on those funds, and there should be some thematic investment for particular some period of time. So this is basically called core and satellite investment strategy. The core strategy, you invest in a particular manner, in a systematic way. You build a portfolio for long term, say 10 to 15 years kind of a portfolio. That should be your core strategy. The core strategy should be means in core strategy you must be putting around 4 to 5 or 6 funds you should be investing, and you should be choosing the fund those who are having the good track record, good fund manager, consistent performance. And also, as you are investing for long term, you should be looking at the long term return prospect of those funds. Here you can choose starting, if you are building portfolio for large and mid means long term portfolio like 10 to 15 years. You can have a look at the large and mid cap fund, multi cap fund, flexi cap fund, mid cap fund, small cap fund. These are the 5 categories you can look at, because here I am not talking about the large cap fund, because most of the large cap fund, if you see last 2, 3, 4 years, they are not outperforming the index in large extent. Sometimes they are not able to beat the index also. So if you if you wanted to invest in the large cap, invest in a very selective 1 or 2 fund. They are maybe they are means able to beat the index, or you can invest in the Nifty ETF also, or Nifty 100 ETF also. That you also can do if you wanted to go for the large cap. But as my point of view, if you are investing for 10-15 years, you can start off with the large and mid cap fund, because and multi cap fund also, because they will give you the their universe of investment is also large cap is there. So if you see that the most of the large and mid cap fund and multi cap fund are investing around 60-70% or some extent 80% of their money into the large cap. So somehow you will be getting the exposure of the large cap in these categories of fund. So for 5 funds, one is large and mid cap, one is multi cap, one is flexi cap, one is mid cap, one is small cap. These are basically will complete the SIP portfolio for you. And also, when you will be choosing this fund, there are a lot of factors you need to consider. You need to understand the diversification. You are investing in the different, you should be investing in the different fund houses. There should in different investment strategy. Different investment strategy is talking about you should be investing in value, growth. The fund manager approach should be different. There should be some fund manager is following top down, some fund manager is following bottom up. So your portfolio should be mixed up, top down, bottom up, value, growth. Your portfolio should invest some you can put some money in focused fund also. If you are a risk taker, you can put some money in the focused fund also. Those will be giving you the concentrated bet, and there should be some volatility definitely, because the number of stocks should be lower there. So these are the basic means way you need to follow when you are building the strategy. And another some of the important factor is that you need to look at the size of the fund, because if you are investing here for 10 to 15 years, if today the size of the fund is more than 15,000 20,000 crore, then if we are talking about 10-15 years, then so you can understand what could be the size on that time. And as you can understand, if you see that if you check the return of some of the good funds which are there last 10-15 years, you see that as the size of the fund grow much bigger, the alpha generation of the fund is comes down. You can check it of your own. If you look at those fund which are there in the 5 to 6 year backs or 10 years back, was the darling of the market, darling of the investment universe. There are a lot of fund. I don't want to take the name of any fund over here, so that should not be that I don't want to do, but there are lot many funds. You can check, you can go through the history. The size of the fund, as long as fund is goes up, the alpha generation as fund comes down. I am talking here about the equity fund. Take it into consideration. I am not talking here about the hybrid or debt fund. This is for equity funds only. Okay, so alpha generation definitely come down as long as fund grow much bigger. If you fund is up to 10,000 is fine for me, but beyond 10,000 definitely alpha comes down. So you need to take into consideration those factors when you are investing. Also your investment strategy should be multi-fund house, multi-fund manager, multiple approach, okay, value growth, okay, all this top down, bottom up. So these things you need to consider when you are going for the investment in building the SIP portfolio. And also one more important thing is the diversification. And see, the mutual fund, if when you are keeping money in the mutual fund, this one particular fund is investing in around 30, 40, 50 stocks. Some fund are investing in 60 or 70 stocks. So your portfolio is already diversified in a particular fund. So if you are investing more than 5 to 6 fund, so there is a chances of very high over diversification, very over diversification. And that is not, you don't want to over diversify your portfolio, because if you over diversify your portfolio, then whatever expense ratio you are giving to the fund manager or expense ratio you are giving, that should not be, means there should not be any meaning. Because if you are holding around 500 stock or 400 stock in your portfolio, so it is all about holding around Nifty 500. So then you can go for the only the passive investing option. So if you are wanted to do active investing, active investing, keep your number of funds low. Believe on the, when you are putting the money, do your own research before investing into the funds. Understand the fund manager philosophy and keep and understand the fund logic, and keep your money on those funds only. Don't chase the return. Don't do too much hunky dunky over here, 1 year here, 1 year there. Don't do that. Keep the money for SIP long term in some fund, at least for 5 years. Okay, so that should be your strategy for the SIP. This is basically I am talked about the core portfolio. Then second part, there could be one called satellite portfolio. If you understand, satellite means this part of the investment you can do through SIP or STP, or you can do lump sum over here also, because here we are talking about the opportunistic bet. And here this investment is not for 10-15 years. This could be quite, investment time period could be quite shorter, maybe 1 year, 2 year, it should be between 1 to 4 5 years. Here we'll be looking at the opportunities in the market in different sector, different themes, and putting the money over there, so that these many means 2-3 years or 4 years time, and get the additional alpha from these theme or these sectors. Okay, if you see that the market, there in market moves in a cycle, and each like the in sectors also moves in a cycle. There are a lot of sectors in a basically some of the sectors are itself is a cyclical sector, and apart from that, some of the means steady sector which are basically give the constant growth. Those sector stocks also move sometime in a cyclical. Sometimes they 2-3 years they don't move, and later on they can they will give you the makeup for the means lagging period. So you need to understand, and you can look at the investment in different opportunities. Maybe for example, in 2020 and the end of the 2019, pharma and IT was the biggest opportunity. sector. Last even last 1.5 year, metal is one of the biggest opportunities. So each not I am just talking about the past experience for past, but believe me, in each and every time there will be at least 4 to 5 different themes will be working on the market. Even if market goes down, there will be some of the sectors, some of the themes that will do well. So definitely you should be putting some money, should be able to identify and put that money over there. Then only you can generate the additional alpha from the market. And also, if you are not understanding or not able to understand and identify those sector or funds, you can take the help of your financial advisor or an expert, and you can understand and then can invest only on those sector and those themes. So these two are basic points. So I just wanted to give you a summary of whatever I have discussed. This is basically, you need to diversify when you are building a portfolio. There should be two parts. One is your core portfolio, one is will be your satellite portfolio. Core portfolio would be long term for 10-50 years. The money will be investing more of it into the diversified funds like your multi cap, mid cap, flexi cap, large and mid cap. Would be for long term definitely, and not more than SIP, not more than 4 to 5 or 6 months. Even if your portfolio, if you are investing also 50-60,000 per month, 4 to 5 or maximum 6 months is good enough for your investment. Building the satellite portfolio, focus on the sectors, focus on the some of the stocks, also some sectors. Look at the past, what are the past, we check at the different cycle, look at the discuss with your financial advisor, identify the sector, invest there, will definitely give you the additional alpha. So this is the basic strategy. So in this later on we'll be discussing lot of other strategies also, investments. So this is some of the basic strategy of portfolio building you need to consider. And one more thing that I have forgot to discuss, when you are doing the diversification, the international fund is very important nowadays. So in your portfolio you can keep, apart from the whatever the number of funds I have talked about, you can keep additional 1 or 2 international fund also, because international fund will give you the diversification of international diversification. There are a lot of international funds available into the Indian market. Some of the funds are investing into the US market, some of the fund investing into the global different global markets, some of the fund investing into the emerging markets. There are China specific fund, Southeast Asia specific fund. There are some investing into the global energy thing like energy and gold and different commodities and all. So there are lot of opportunities in the global side. And even if you are building the SIP portfolio, you should keep some money into the global fund for that matter. And the first option should be, you should put, this is because the first you need to put some money into the US market, because it is the biggest market of the world. And and most of their companies are they are doing the business globally. So keep some money into the in the US market, and also you can put some money into the emerging markets, or for that matter overall global market. You can choose 1 or 2 fund from here also, and keep investing there, and this will give you the global diversification. Okay. And if you see the today there are different geopolitical events happening, different countries. Sometimes the growth of the maybe the Indian growth is not Indian market may not be doing well. There should not be any growth for some times. So if you keep some money into the global market, then it will means your portfolio will not be deteriorate that much. Your portfolio return will be constant. So you can put around 15 to 20% money, as per my understanding. You can put 15-20% money into the global funds also. So this will give you the very good diversification. So overall and that extent 6 fund, that will be okay. So this is how you can diversify and build your portfolio. So this is for today. In later on we'll be discussing about the different types of fund, what are the opportunities are there, how can you will be discussing on different strategies of mutual fund investment. So thank you very much for listening to us. So if you like this video, please share this video among your friends and families, and please subscribe to our channel, so we'll be getting, whenever we'll be uploading a new video, you'll be getting the update on this. And thank you very much.